Hello, and welcome. We are going to be doing a deep dive into NIO. We're going to cover the good, the bad, the ugly, and we're going to give some price projections all the way up to 2036. How accurate these are going to be, who knows, but I'm going to give some reasoning and show you how to do it as well. So, the first question that one should ask themselves when investing in a stock is, what is the probability of bankruptcy? Okay, for NIO, it's 50 here, 48% to 60, and for the average company, I mean, you can see it's about 10 to 50%. So NIO's definitely on the higher end there, making this a little bit more risky. And it's not hard to see that risk when you take a look further into the fundamentals over here. You can see the revenues up here. Net income is greatly down. They spent about $3 billion USD last year just on investments, which is, better than nothing, I guess, but they are burning cash. They do need to start selling some more cars. And that's kind of a look at their fundamentals so far. And I guess the reason why I cover NIO so much is because it does really well, and I notice a lot of people are researching it, possibly because there's a lot of bag holders here looking to see if they're going to get their money back. Hopefully that's not you, but if it is, I do have some good news, because their all-time high was $60 in 2021, and it does look like a great buying opportunity here. But let's zoom out a little and see what the valuation has been like over time. Okay, here's the price, here's your IPO, shot up thanks to the EV hype, and then reality started to set in, and we're here today, where there's a little bit of an uptick at the end just because China announced more EV incentives to artificially prop up the market. Hopefully this can restart a bull run here. And if we take a look at the valuation, same sort of story. Okay, here's the price going up and then coming back down as people realized that EVs weren't as in demand as they thought. And the important graph to look at is the price to sales ratio. Okay, the valuation over time. And typically we see that in line with analysts' estimates. Okay, so people hyping it. Oh, look, they're going to sell so many cars, and then reality starts to set in. Those growth rates are adjusted lower, and your price to sales ratio is going to follow that. For those who don't know, the price to sales ratio is basically the price per share divided by the revenue per share. And the reason we're using revenue as opposed to earnings is because NIO does not make money net. Okay, they have a lot of revenue, but they do not make money. They're losing about $35,000 per car, and their earnings are negative, so their price to earnings ratio would be negative, and that's why we're using a price to sales or a price to revenue. And we can see their price to sales ratio right here is 0.97. I'm seeing sort of different levels depending on where you look, like NIO price to sales. You can see here it says 1.1. Really, you just want a general idea. But let's go with 1.1. Okay, now what's the average auto manufacturer price to sales? Well, it's 4. And this says EV Auto Truck and Manufacturing, TTM 2023. So that's pretty current, is 4.1. That means the average auto manufacturer is valued at 4 times its revenue as compared to NIO. Okay. Now we have to ask ourselves, why is that, okay? Is it like a Chinese auto stock thing? What is it? Well, if we look at BYD price to sales, you can see it's 1 as well, so that's pretty low compared to average. XPeng, I think, is same store. Oh, XPeng's 2. So double NIO and BYD's valuations, but still half of the average auto company. Now, that kind of gives you an idea of why those valuations are so low. We can see that, okay, maybe Chinese EV stocks aren't as valuable or aren't seen as valuable as regular auto manufacturers in the United States. And yeah, for the most part, we could see that being true. But maybe there's more to that. Okay, why are these valuations low? Is it a growth issue? Okay, what do the growth estimates look like? I like simplywallstreet.com. You can kind of see the revenue right now. This is in yuan, 55 what is it, billion? Yeah, 55 billion. And in 2026, they're projected to do 112 billion won. And they're looking at a revenue growth of 19.8%, which seems pretty realistic, okay? Because NIO cars produced in 2023 was 160,000, okay? Whereas BYD is the biggest EV producer in China. They produced 3 million vehicles. So NIO has a lot of room to grow if you're comparing it to something like BYD. So, 19% per year seems pretty reasonable. And if we put that number here, 19.8, this is really just a mess, this chart, but really we're just looking at this, okay? So here's our growth rate of 20%. Here is NIO's stock price. We're going to make it, here's my key assumptions in the corner, okay? My number one key assumption is that the revenue and the stock price are exactly proportional, okay? So as the revenue goes up, if it goes up 1% per year, we're going to assume that the stock price is going to go up 1% per year, and that's, exactly proportional value shift. So here's our stock price right now, $449 USD for NIO, assuming a 20% growth rate compounded. Here's what the stock price would look like going into 2024 and beyond to 2036. And this one right here is our price to sale, is what the price to sales would be, what the difference would be with a different price to sales, okay? Really, there's two things right here. There's two things that impact stock price, okay? Really, everything that could possibly impact stock price comes down to two things, okay? It comes down to the growth rate and the valuation, all right? Now, and I guess the earnings or revenue. Okay, three things. But really, these are kind of set in stone, the earnings. Like, the earnings are going to be what the earnings are, but the valuation is going to constantly change, and the growth rate is going to constantly change, or the growth rate estimates, I should say. Let's put those here. Estimates. All right, so this is our growth rate estimate. It's 20% per year for the revenue. Again, we're assuming the stock price is going to be 1-to-1 to that. And here's NIO's current price to sales of 1.1. All right, if we use a price to sales of, let's say, 2, here's my prices. Here's the stock prices in the case of a 20% growth rate year over year, but applying a price to sales ratio of 2 instead of 1.1. All right, and as you can see, that's a pretty big difference. If we look at 20% compounded year over year for 2026, let's say, we're already seeing a stock price of $7.72 at the current valuation of 1.1. Okay, if we use a price to sales ratio of 2, if we think the valuation is going to be 2 in 2026, then we would see a stock price of $14, which is a 213% increase. Now, one thing that's interesting, I think, is that the growth rate doesn't make as much difference as the valuation does, okay? Because if we change the growth rate, let's say a bearish case, they're not going to, but let's say they grow at a rate of only 5% per year, and their price to sales ratio is industry average of 4, that would still give us a stock price of $18.90 or 321% increase over where it trades today. Whereas if you do the opposite and you assume a high growth rate at the current valuation of 1.1, that's only a $9.86 share price in 2026, which is, still a 700% increase. Or no, sorry, that would be assuming the 4. Let's change that. That's a 120% increase. So price to sales valuation makes much more difference in the share price than the growth rate is what that shows you. Thankfully, NIO's growth rate's pretty good. And one thing that NIO also has going for it is if we go back here, as you can see, these charts are pretty much identical. Okay, the valuation and the price of the stock pretty much just follows the valuation. Look at them. They're very, very similar charts. And what's interesting, though, is the big indicator of change for the valuation is the growth rate and what analysts and investors think of the growth rate, okay? If a company's going to grow faster than analysts and investors think, meaning they're beating earnings estimates, that's going to bring the valuation higher. Okay, and it's going to compound, and that gives you a nice compounding chart like that. It's going to go parabolic. Whereas if the growth rate is lower than investors and analysts expect, and a company is missing earnings, that's going to bring the valuation lower and the stock price along with it. That's kind of typically how these things work. In NIO's case, let's assume I told you I was going to give you some estimates, so let's give you some realistic estimates, okay? Bearish case, very conservative. Let's say 12% per year compounded growth rate at, I don't know, a 1.2 valuation. Historically, they're at 1.1 right now for their valuation, price to sales, but historically that's been around, 2 for a little while. So let's say it's going to pick back up and go higher. But again, we're being conservative. Let's say 1.3. Here is the stock price we can see in 2026 at a 1.1, their current valuation at a 12% growth rate. Again, assuming these three assumptions, that the revenue and the stock price are exactly proportional, that 12% growth rate, and a 1.1 growth ratio or valuation, that would give us a stock price of $631 in 2026. But if we assume a valuation of 1.3, and I think that's going to get a little higher, that would give us a stock price of $746 in 2026, or a 66% upside from $449 today. And that's really, really conservative. We could probably bump this number up to 1.5 and bump this up to, around 17. So, still realistically, we're looking at a $9.81 share price for 2026, which is a 118% increase. But things get pretty crazy the further you go down. 2030, that would give you 1838, which is a 309% upside. So lots of potential for NIO to grow. Like I said, their probability of bankruptcy isn't that bad. I think the risk to reward proposition's pretty good for NIO. I'm not seeing any huge red flags aside from, China having to artificially bump up the EV sales through incentives, just because we've seen EV demand start to slow down. But one chart that I like about NIO as well, for this company, I don't even know how to say this, cnevpost.com, it shows you NIO's monthly deliveries over time, trending up still. And, what I think it's pretty sustainable because, we saw NIO spending all this cash right here in 2023 in infrastructure and investments in their sub-brands. And I think that's going to help prop up deliveries going into 2025. So, that makes a 17% growth rate very reasonable, especially for a smaller EV company like NIO, just doing 160,000 cars a year, as opposed to BYD doing 3 million. I think Tesla's doing 1 million. Tesla, 2 million. So NIO, lots of room to grow. I think that's a pretty good growth estimate. 1.5, I think it's a good price to sales ratio for NIO. And these are the prices that we would expect to see under those circumstances. So please drop a like if you found value in this. I know I switched it up today, trying different things. I know you guys like to see the NIO content, so I'm trying to do as much as I can. And just trying to, figure out what kind of format of videos that you guys like to see. So hopefully this is it. And yeah, like I said, drop a like, subscribe. Let me know if you guys want to see some more videos like this. If you want to see videos of how to make charts like this in Excel, if you want to learn how to invest, let me know. And maybe I could do some sort of course. But yeah, I'm open to suggestions at this time. Again, for the third and final time, drop a like. It really helps the algorithm. Subscribe. And I will see you next video.